Welcome to Knowledge Update channel. Today we are going to discuss about the taxation and tax returns of United States of America. USA, which is one of the dominant country in the world, has a unique tax structure. You have central, federal and state. There are both types of taxation, and in this webinar we are going to focus more on the different types of tax returns for individuals, corporates, LLC, partnership, and which are the peculiar information, which are the peculiar things one should be aware about that US tax returns that is going to be covered. And I have with me Vishal Jagatia, who is going to speak about and focus on the taxation returns of USA. Let us first look at the structure of taxation in USA. As I mentioned earlier, the taxation in USA is divided into federal, state, local, and special purpose jurisdiction. Unlike in India, wherein it is a central taxation, in USA it is a primarily divided into the federal and state. Both federal and state have a different taxation implication. So when I talk about in India we have to file one income tax return. In USA we have to at least two tax returns. One is a federal, second is a state. So the tax structure is divided into federal and state, and also there are local and special purpose jurisdictions are there. Taxable income may differ from financial reporting, as we know that the for income tax point of view, the deductions are available. There are few income which is taxable, which is not taxable. So the taxable income and financial reporting, they both are different thing. As far as in US is concerned, the ITAIN, that is individual taxpayer identification number. ITAIN is a for a new non-US citizen. So if you are not a US citizen and if you have to file US tax return, then ITIN is something which is required for you. For every residence taxpayer, SSN, social security number is mandatory. Tax year and corporate account year, they both are a different thing. That can both be different thing. Why? Because the tax year is a can be a corporate accounting year like calendar year, or it can be different, it can be less than 12 months, or somebody can select a different year as a tax year which can be other than a corporate accounting year. One very important thing which is required to be done is that the citizens and residents are taxed on worldwide income. So if I'm of Indian residence, I am required to pay tax of global income. So citizens and residents are required to be taxed on a worldwide income, and they are also allowed for a foreign tax credit. One very important thing which is required to understand is that the United States is one of the two countries in the world that taxes its non-resident citizens on worldwide income in the same manner and rates as a resident. And another country is Eritrea. So if you look at the non-resident citizens are also to be required to be taxed on worldwide income, that is unlike India. And when we talk about India comparison, in India it is income tax department. CBDT is the main authority. As far as US is concerned, it is IRS, Internal Revenue Service. That is the government agency in the US department that talks about that is concerned with respect to taxation part in the United States of India. One additional thing which I would like to point out here is that in case of US citizen having foreign bank accounts or financial assets that exceeds 10,000 US dollar at any time during the calendar year, then F bar form is required to be filed. So for every US citizen, if they are having more than $10,000 at any time during the year, then they need to file F bar form. Now with this basic structure of idea, let us look at basics of taxation. So taxation is a tax written by tax resident. So any person who is a tax resident, they have to file a tax return. Now who is tax resident? US citizen is always there, plus US green card holder and someone who usually present in USA for certain period like 3 years. So that is a presence requirement is there for number of days if you stay in USA, then you qualify to be a tax resident. So every person who is a tax resident need to file tax return. Progressive tax system, that means what, the taxation structure is such wherein if you earn high you to pay higher tax. So objective is that somebody who is having a lower income should be subjected to pay a lesser tax, lower tax compared to the higher income earning person. So that is the system is also in USA. uh, Plus, like in India, in US also there are a lot of deductions are there. The standard deductions are there. There are itemized deductions for certain taxpayers, and that need to be choose. So a lot of options are available. Which options is applicable? Which options is useful to you? That selection is required to be done. And the tax credits are with something which is subtracted from your tax bill. So when you want to pay tax returns, so there are tax credits available, and that tax credits will need to be reduced from your tax, then only you to pay tax. So this is what the different types of income tax returns. Form 1040 is for individuals, form 1041 is for estates and trust, 1065 is for partnership, 1120 is for C corporation, and 1120S is for S corporation. So filing of income tax return is based on what is your status. Now with that, let us look at which are the different kind of status is primarily depending upon the what is the type of structure. One second thing is that what are the selections options you've done, because there are in certain cases you can select and opt to be taxed as a sole proprietorship or as a pass-through entity. So these are different taxation options are available based on the structure. Now let us look at the first and very very important thing is a corporations. So corporation must pay tax on the taxable income independently of the shareholders. So like the corporate and tax shareholders are different persons. First tax to be paid by corporates, and shareholders has to pay tax on the dividend which is received from corporation. Partnership is a pass-through entity where the firm is not subject to income tax, but their partners calculate the taxes by including the share of partnership firm. Then corporates, we have S corporation and C corporations. Corporations are generally owned entirely by US citizens or residents, may elect to be treated similar to partnership firm. LLC, which is a limited liability company, and certain other representatives may elect to be treated as a corporations or partnership. So there are many structures options are available, and in even in individual tax returns there are a lot of options are available. And now Vishal will really talk about the various forms, nitty-gritties of the various forms and which are the options available. So now I hand over the charge to Vishal.
Thanks, Chintan sir. Now let's understand first form 1040. It is for individuals. The form is filed by the individuals who are deemed resident of the United States for tax purposes. Now let's talking about when it is required to be filed. It is required to be filed if the income crosses a threshold where the taxable income is likely to be positive in order to receive the refund or withheld income or to receive certain credits. The biggest question arises on your mind is that how it is filed. The first option is that it is filed simply by paper, where you simply fill the form and courier to the IRS. The second option is that through softwares, as there are so many softwares available in the market. After that, the signature requirement, there are also different variants for 1040. The first one is 1040 NR for non-resident aliens. The other is 1040 SR for taxpayers who are 65 or older. And the last one is 1040X, which is used to make the correction on Form 1040. One can also file extension by filing Form 4868. Now the filing status for individuals. There are five status for individuals. First one is single, the other is head of household, the third one is married filing jointly, the fourth is married filing separately, and the last one is qualifying widower. Now, the second form is Form 1041. This form is filed by fiduciary of estate and trust. What is fiduciary? The question in your mind. A fiduciary is a trustee of a trust or an executor, administrator, personal representative, or person in possession of a property of a descendant estate. Further, like Form 1040, it is filed by paper and also through softwares. One can also file extension by use Form 7004 and also choose accounting method, cash or accrual while preparing the tax return. Now, talk about the next form, Form 1065. It is filed by the domestic as well as the foreign partnerships. Like Form 1040 or 1041, it is also to be filed by paper or through softwares. Like earlier said by Chintan sir, the partnership is a pass-through entity in which the partners are allowed to pay the taxes in their individual tax return as it avoids the double taxation. Also, one extend the due date by simply Form 57004. One can use the cash accrual or hybrid accounting methods while filing the tax return forms. The next form is 1120. It is for the corporations. All domestic corporations, including corporation in bankruptcy, must file an income tax return whether or not they have taxable income. This form is also filed with paper or through software that are available in the market. One can also file extension by filing Form 7004. Permissible methods include cash accrual and hybrid that clearly reflects the income, and one can also use it consistently. The last return which is on the discussion is Form 1120S. A corporation or other entity must file this form if it elected to be an S corporation by filing Form 2553. The IRS then accepted the election and the election then remains in effect. Like the earlier form, it is also to be filed by paper or through accounting software. One can also file the extension by filing Form 7004. Like permissible methods earlier, it is also include cash accrual and hybrid. Now, the due dates of all income tax returns. For Form 1040, it is April 15, but currently due to extension, it is May 17. For Form 1041, it is for calendar year April 15, and for fiscal year, it is 15th day of the fourth month following the close of the tax year. For Form 1065 for calendar year, it is March 15, and for fiscal year by the 15th day of the third month following the end of tax year. For Form 1120, it is 15th day of the fourth month after the end of it is the tax year. And last for Form 1120S, it is 15th day of the third month after the end of its tax year. Thank you all for listening this wonderful video on US tax returns.